But let's also take a look at what brokerages have to say about Tata Motors, right? Post this news of the demerger. Morgan Stanley has an overweight rating, target price of 1,013 rupees. In fact, Morgan Stanley says that the demerger reflects confidence in the passenger vehicle business being self-sustaining, and it can, in fact, help in better value discovery for shareholders. JLR in India, passenger vehicle business will also have synergies in the electric vehicle era. JP Morgan also has an overweight rating, target price is 1,000 rupees per share. In fact, they also say that the demerger might lead to better value discovery and necessary approvals could take further 12 to 15 months to complete. Investec has a hold rating, target price at 900 rupees per share, but they are saying that they do not really expect any significant value on, any significant impact on valuations as a result of the transaction. In fact, it will create a pure play CV and global PV play with respect to Tata Motors. Incred also, of course, taking a contrarian view here. They have a reduced call, target price at 639 rupees. And they also maintain that post-split, the valuation may favor the passenger vehicle end of the business, which commands a 62% of total valuation. Let me also bring on board, our technical expert for today. Joining me, Sacchitanand Uttekar of Tradebulls Securities. Great to have you on the show, Sacchitanand. Before we talk about the markets, want to do a chart check on Tata Motors as to where do you expect the stock to open today?
Good morning, Nandita, and thank you for having me on the show. Clearly, when we look at the chart structure, the stock has been in a very strong secular bull trend. But with an RSI value on its monthly and weekly scale above the 85-90 zone, I think it will be difficult for the momentum to sustain. And probably that's why it's better to look at the stock on a decline itself. If you look at the daily scale, we have been seeing a bullish pattern breakout, and the pattern breakout targets are almost concurring near to that 1,000 mark. So I don't see the stock scaling and sustaining about the same. Probably the stock is due for a corrective move. The immediate level to track on the lower side is standing at around 980. The moment this particular level is breached, we may see a good decline towards 950, 945 zone. I think that is the most important support zone from a weekly structure perspective. So I think it's better to wait for a decline and then get into a counter. On the higher side, we may see this particular stock, getting into a hurdle at around 1,000, wherein the profit booking could be very evident. So it's better to avoid chasing momentum and wait for a decline.
All right, wait for a decline to get into Tata Motors and avoid chasing momentum here. But let's talk about the indices as well, Sacchitanand. Third straight day of record close, although you can say that the euphoria clearly is missing, because whenever we hit a record high towards the end of the day or towards the midday, we turn very range bound and volatile, right? So here on, do you spot any bit of fatigue on the charts, especially in terms of benchmarks? And secondly, Nifty Bank, fourth straight day of gains, even though it has remained flattish in the last 2 to 3 sessions. But do you expect this uptrend to continue here on?
Well, Nandita, uptrend should continue unless we don't see the Nifty, closing below that 22,000 mark. I think that is the immediate support that we are tracking in. If you look at the last week, we saw a very strong surge on Friday session, wherein the index, displayed a very confident closing above the 22,200 mark, where Nifty was struggling, to sustain. So I think the immediate support on the lower side is placed somewhere close to around 22,200. This is where even the option, writers are very confident. And on the higher side, the immediate hurdle is at around 22,500. So probably we may see Nifty, taking a pause and consolidate a bit before it resumes the next leg of the up move. So we may see a sideways action within this particular range. I think for the day, 22,285 could act as a very strong support. Any declines towards that particular support would be a good, healthy opportunity to create some long positions. But I think, again, here, chasing momentum should be avoided. 22,500 looks like an immediate hurdle. So probably we may see some range-bound action throughout this particular week within this particular range itself.
All right. And, talking about Nifty Bank, as I mentioned, 4th straight day of gains. Do you see more upside and, the index, in fact, defending that 47,000 mark? And secondly, I think, I want to just quickly take a query also, since it is on the banking space. Union Bank, how is that looking on the charts in particular? Pon Rajesh wants to know your thoughts on this one.
So Nifty Bank, definitely, the reward to risk opportunity is much more better as compared to Nifty. And even here, if you look at the data, 47,000 looks like a very confident base. So any declines towards 47,100, 47,170 should be utilized to create some long positions. On the way higher, we may see the Nifty Bank, outperforming, and probably we may see it scaling towards 48,000 earlier. So I think when it comes to both the indices, I think the reward to risk opportunity is far better in Nifty Bank. Also, if you look at some of its constituents, we have clearly seen that there has been a very strong positioning by ICICI Bank, which still continues its high top high bottom sequence. HDFC Bank has displayed some resilience. In fact, it has maintained its tail above that 1400 mark, which remains a very strong psychological support. And from here on, if you look at both these constituents, they are positioned for a good, strong rally. So I think the overall contribution for Nifty Bank would be led by these two main components, and that's why we believe that Nifty Bank is ready to outperform. When we look at a stock like Union Bank, probably we may see some bit of a consolidation here. On an immediate basis, it has been facing a lot of hurdle at around 150, 148 kind of a zone. And on the lower side, 140 remains a very crucial support. So probably we may see this stock consolidating within this particular range itself.
Right. With that, the markets have opened, of course, and we have we are having a soft start this morning, given the fact that the GIFT Nifty is also suggesting or had suggested a subdued start for the Indian market. But if you look at the Nifty, just about 50 points lower. Open. In fact, 22,350 is where it's at. Yesterday, remember, we had a record close at 22,400 and we had clocked a fourth straight day of gains and third straight record close for the Nifty. But of course, we have snapped out of this uptrend for a bit. Of course, some bit of profit taking happening at higher levels. Look at the Sensex down 200 points, 73,670 is where it's at right now. The mid-cap index also seeing some bit of a pressure. So 0.3% kind of downtick coming in on the mid-cap index. Let's pull up some of the sectoral indices as well. Looking at the Nifty Bank Index, that has also snapped out of a 4-day gaining streak. In fact, the Nifty Bank Index is down 0.5% this morning. Also, let's take a look at the Auto Pack. Post the news of Tata Motors demerging two of its arms, PV and CV businesses. Let's see what the auto index is doing. Of course, 0.5% uptick coming in there. I'm sure most of the gains must be driven by Tata Motors, because Tata Motors itself is the top Nifty gainer today, 2.5% up on the back of that particular news flow. Aside of that, if you look at M&M, that's also snapped out of its losing trend, and it's among the top Nifty gainers today, and so is Eicher Motors. So a couple of names from the auto pack are doing well today. But let's also take a look at the Nifty IT index, of course, right? Because CLSA has downgraded some of the large cap IT names. So that could have an impact, because TCS is among the top Nifty losers today, third top Nifty loser as we speak. And JSW Steel as well continues its downtrend from yesterday. CLSA had downgraded JSW Steel and Tata Steel yesterday, and that is clearly weighing in on the stock prices today as well. HCL Tech, another top Nifty loser on the back of that report from CLSA on the IT pack. Sun Pharma, Tata Steel, HDFC Bank, Reliance, these are some of the heavyweights that are on the losing end today. And aside of Tata Motors, if you look at the other gainers, NTPC extending its winning streak. You have UPL as well today on the gaining side, almost a % gain kind of gains coming in there. Bharti Airtel, Coal India, Apollo Hospitals has snapped out of its losing trend. It has been on a losing spree for quite a few sessions now. Just about trading in the green, slightly positive, no big gains coming in there. ITC, Bajaj Finance, Adani Ports, Bajaj Auto, these are some of the other movers. But Sacchitanand, I want to get in your thoughts on, an Infosys and TCS on the charts. As I mentioned, there has been a report from CLSA where they have downgraded TCL and HCL Tech to sell from underperform. Of course, we've seen that the IT pack has been stuck in a downtrend over the last few sessions. Do you expect the pressure to continue?
Yes, Nandita, in fact, we are of the opinion that there is a good amount of consolidation to corrective move, which should be unfolding in Nifty IT. And within this particular space, we are confident about the chart setup of Tech Mahindra, wherein we see the stock, scaling down towards 1220 or 1200 kind of a zone. So, if you look at most of the constituents, they are displaying a bit of a weakness. TCS, it did show a good spurt in momentum last week, but the hurdle at around 4200 remains the important cluster of resistance. And on the lower side, 4000 remains as a dependable support. So probably TCS is one of the stocks that can be avoided from a sell perspective. We may see more of a range bound action there. But when it comes to Infosys, there has been a negative crossover on its short-term averages, plus its RSI on the lower side has breached below the 50 mark, and it has also, breached below the consolidation support at around 1700. So I think the low top low bottom sequence or the bearish sequence should continue here. The immediate support that we are tracking on the lower side is around 1600. So probably we may see Infosys continuing its negative trend. Keep a stop loss somewhere close to around 1670 on a closing basis, and fresh short positions can be considered for a 1600 target.
Right, that's the view on the IT pack. But the other stock that I really want to talk to you about is IFL Finance, right? Let's pull up the charts of IFL Finance and see the kind of knee-jerk reaction that we are seeing on the stock as a result of the RBI's order, putting an immediate ban on sanction and disbursal of gold loans. Now, gold loans forms 32% of the AUM for IFL Finance. Although the RBI has said that the company can service existing gold loan portfolio through collection and recovery processes, but of course this has come as a big setback, and of course the management has also reacted to it. They've said that they will be of course complying with RBI norms and ensuring that things are in place. But of course, knee-jerk reaction on the stock, on the charts, how much more of a downside can one really expect?
This is the first, gap down that we have seen on the stock. It was, trying to sustain about that 560, 580 kind of a cluster support zone. So this is the first time wherein this particular cluster support has been breached. So definitely going forward, the same level at around 560 would act as a very stiff resistance. And on the lower side, the next meaningful support is placed somewhere close to around 410, where its 200 weekly exponential moving average support is also placed. So we may see this, trend getting extended. Somewhere close to around 410, 420 would be an ideal zone to review positions.
All right, that's the view then. Aside of that, let's talk about a Manappuram Finance as well. We have a query coming in from Rajesh Veera on this particular stock. Here, what are the kind of stop losses one should keep in mind?
So even from a trading perspective, I think this is a good candidate wherein the stock seems to have displayed a very confident breakout above that 185 cluster resistance. The gap of opening, itself is reconfirming the momentum strength. And we may see this particular momentum getting extended towards 210. Positionally, we are expecting a price target somewhere close to around 224. And that's why I think momentum longs can be built in here up to 193. The stop loss for the trade should be placed at around 188. On an immediate basis, we may see the level of around 200 getting achieved today. But from a momentum perspective, expect this particular rally to continue towards 210.
All right, that's the view on Manappuram Finance. Rajesh, hope that answers your query. But the other query is coming in from Ashutosh Namdev, and he wants to know your thoughts on a BHEL as to whether it makes a good or it is a good time to invest in this particular stock. BHEL, of course, today it's cooling off a bit. Yesterday, it hit an 8-year high, right? 13 to 14% kind of gains we saw in yesterday's session. Would you advise, Ashutosh, to wait for a further dip before getting in?
Well, First of all, if you look at the monthly chart structure, the long-term structure, it is still indicating that there's enough room on the upside, which is yet to be, uh, uh, which can be seen over the period of few months. But on an immediate basis, we may see the stock, displaying some consolidation to a corrective. So the immediate support that he should keep in mind is around 245. Any declines towards the same would be a good opportunity. On the higher side, we have already seen a good strong 10 years breakout at around 200 levels, and the pattern target is still indicating a price up move towards 310. So probably the reward to risk would not be that healthy, but it is better to accumulate this particular counter on a decline. From a trend strength perspective, it is important that the stock maintains its closing above 230 zone. So I think the stop loss can be placed there on a week-on-week closing basis. And on a decline up to 240, 245, I think that will be an ideal level wherein some longs can be considered.
Right, that's the view. Hope that answers your query. But the next query is coming in on an RVNL, and this one is coming in from Gomthi Muruga. She wants to know your thoughts on RVNL. Of course, some of the railway counters have cooled off quite a bit over the last 1 month. Although, of course, on a 6-month basis, we've seen a very strong rally across the railway pack, right? But the recent downtrend, should that be bought into?
So I think this is a good accumulation zone right up to 220. Any further declines could be a good opportunity here. But as of now, the major trend still remains positive. 205 is an important, support zone from a trend perspective. So until that holds, the buy on decline strategy would be healthy. And recently, we have seen the even the declining momentum getting stalled. So probably this is a good time within this range of around 240, 45 on the higher side to 225. I think the stock can be accumulated.
All right, that's the view on an RVNL. But lastly, one of the queries that are that's coming in is on Paytm from Satya CK. He wants to know whether the weakness that we are seeing in this particular counter should be bought into with a 1 to 3 year perspective. Would you advise anyone to jump in right now, or would you say it's a clear avoid?
Nandita, it still remains an avoid. Even at the level of around 900, we were indicating the same. Even on a decline, we have maintained our stance. And even right now, I think the trend is far more clearer. So we don't expect an immediate turnaround in this particular stock. The price trend is still, displaying a good amount of weakness. Eventually, we may see the stock, scaling towards 280, 85 kind of a zone. So that will be a good level wherein we may review this counter. But as of now, it's a clear top, clear lower top, lower bottom sequence, and buy on decline strategy may not be healthy.
All right, that's the view on Paytm. It's a clear avoid. With that, hold that thought, Sacchitanand. We'll come back and take up more viewer queries. But right, let's go back to Sacchitanand then, who's been waiting by quite patiently. Sacchitanand, a number of queries have trickled in since the last query that we took. Rupak Mehta wants to know your thoughts on Aavas Financiers. Right, he's I think he already has some holding, and he's losing somewhere around 5% on his investment. He wants to know, in fact, whether he should stay invested and wait for a turnaround. What would you advise him to do?
Nandita, we have, I think, addressed this particular stock a couple of times on your show, and clearly, the trend on this particular stock remains weak. We are of the opinion that the stock may, scale lower towards around 1200 levels. So as of now, even if you look at some of the trend indicators, they are not displaying any change, anticipated change. So probably we may see this price action on the lower side getting extended. So it's better to avoid averaging in this particular counter and wait for a decisive price pattern reversal. So which is not evident even at this juncture. So probably he can delay his investments.
All right, that's the view. I hope that answers your query. I want to get in your thoughts on a Gensol. Prashant Sampath wants to know your thoughts on Gensol. Today, I think it's up 5%. Over the last 5 sessions, we've seen some bit of profit taking, or so to say, because it's down 15% if you look at the last 5-day movement. But here on, given today's recovery, would you look at levels on the higher side here?
Well, the volume action is not that convincing. We have already seen the stock, displaying a correction from the recent life high at around 1376. So, we may see a pullback, but the volumes are not that convincing. So I would rather avoid, advising any long position there.
Right, that's the view then. But I think I would like to take a last query on RCF. This one is coming in from Sukruta. She wants to know your thoughts on this particular stock. Last 1 month, we've seen the stock shed quite a lot of weight, right? 14%. But for somebody who has some bit of holdings in this particular stock, should they, wait it out, book some loss? How would you look at this one?
Well, RCF, I think now the stock is close to its demand zone. 140, 145 looks like a decent support wherein the stock can be accumulated. On the lower side, major turnaround or a pattern failure will only unfold in case if the stock starts trending below 132 levels. So I think keeping a stop loss on a weekly basis at around 132, the stock can be accumulated. We may see, a few months of consolidation here, but overall the trend structure is still healthy. There is no major change when it comes to its long-term structure. We may see this particular stock stabilizing here, and probably once the uptrend resumes, again the stock may head higher towards 185, 190 kind of zone. So it's a good zone wherein the stock can be accumulated.
All right. Well, that's the view on RCF. But this wraps up our query segment. But Sacchitanand, anything you're spotting on the charts for the next couple of sessions?
So, Nanita, I think what we have shared with your team is Reliance Industries is looking positive. We have seen a good strong breakout above the 3,000 mark. It has been sustaining well. A fair bit of consolidation here, and the stock can be accumulated. Keep a stop loss somewhere close to around 305 on the lower side. And on the higher side, we may see this rally getting extended towards 3070. So this is a long trade from my end. On the short side, Eicher Motors had displayed a breakdown from a consolidation band. If you look at the daily chart structure, there's a falling tree formation, again a continuation pattern on the daily scale, reconfirming the weakness. We see the stock falling towards its 200-day exponential moving average, which is placed somewhere close to around 3650. So trading short positions are recommended here. Keep a stop loss somewhere close to around 3830, and review your position somewhere close to around 3650.
All right, RIL and Eicher Motors, two recommendations coming in from Sacchitanand. With that, Sacchitanand, as usual, thanks a lot for taking out time and joining in and sharing your thoughts, and of course addressing all our viewer queries so patiently. Have a good day.
Thank you, ma'am.
Well, with that, of course, before I wrap for the day, in fact, I want to just take a look at the new listings, two new listings at 10 a.m. today. Of course, Exicom Tele is likely to, see a blockbuster debut. In fact, we had a pretty healthy subscription figure. The IPO was subscribed 130 times the shares on offer, and there was a very strong demand coming in from non-institutional investors as well as retail investors. Of course, watch out for that one at 10 a.m. Also, Platinum Industries will be listing on the bourses today, and it is also expected to command a premium of somewhere around 50% to its issue price. So these are the two new listings to watch out for at 10 a.m. But with that, we are completely timed out on this edition of Opening Bell. I want to thank all of you for tuning in. Of course, if you have any comments to make, any feedback to share, leave them in the comment section below. Of course, keep following us on all our social media handles as well. And of course, you guys stay tuned to Moneycontrol for all your other news and updates through the day.